Hello Moko, my name is Marcus and I am excited to present Team 29's recommendations tailored to your needs. From our understanding, you must decide between hiring 1 or 2 students for accounting purposes. You would also like to go public on the TSX, looking to follow in the footsteps of Thomson Reuters, as well as its ESG principles. Finally, we will decide what to do with the $45,000 in branded merchandise.
Alright Moko, I know you're debating between hiring 1 full-time worker or 2 part-time workers. Let's weigh out the pros and cons of each and see which one works best for you. Now, hiring 1 full-time worker is definitely easier, as you can delegate all the tasks to the same person if you trust them. And also, you only have to pay 1 person, so it makes the payrolling a lot easier. However, the downside of this is that now you have 1 person handling all of your tasks. So that this means it's the same person handling cash transactions and the same person recording those cash transactions. So if they have the idea of committing any fraud, it becomes a lot easier for them. This is why you might want to look at hiring 2 part-time workers, as it provides more security against this type of fraud. If you have 1 person recording your transactions for you and 1 person actually handling the cash, then it's going to be harder for them to commit any fraud unless they conspire together, which the chances are a lot lower. Based on your goals and the type of company you own, we believe that it's best for you to hire 2 part-time accounting students. This will ensure that you're complying with public accounting principles and using segregation of duties to prevent fraud. Alright, now the downside of hiring 2 part-time workers is that you're going to have to pay more to train them in the beginning. And also, coordination is going to be harder. You're going to have to be good at managing multiple different people, doing multiple different tasks. And it's not as simple as just telling 1 person to do many tasks.
Hi Moko, I'm Thomas, and I'll add to what Sep has said by describing how you can maintain accounting tasks while minimizing fraud using a 2-person team. Okay, so let's start looking into practical measures you can take using the fraud triangle framework: opportunity, pressure, and rationalization. Opportunity is the potential for fraud to occur due to gaps in controls. You can address this by implementing a 2-person system. 1 person collects cash and another records it, creating checks and balances. A 2-person system is the most effective for preventing fraud because it distributes the task dynamic. Reconcile cash balances daily and make sure irregularities are brought to your attention immediately. Restrict access to financial statements to authorized individuals only, and schedule regular audits to spot anomalies. Pressure comes from financial or workplace stress. To mitigate this, build a friendly corporate culture with understandable and reachable expectations. Be approachable and let employees express their problems. Also explain clearly that firm action regarding fraud includes termination and prosecution to deter such behavior. Rationalization is the way a person legitimizes fraud. Counteract this by creating a culture of integrity based on good ethical standards and clearly communicated penalties for misbehavior. In this regard, when employees feel appreciated and the work environment encourages accountability, they are unlikely to rationalize dishonest behavior. By addressing the fraud triangle, reducing opportunities, alleviating pressures, and curbing rationalizations with a 2-person team will protect, alleviate media's collective's finances while developing a culture of trust and responsibility.
So Moko, we can appreciate that you feel as though your media company has no environmental impact, although our research does suggest otherwise. We found that the production of media content produces a significant amount of energy and contributes to the ongoing struggles the world has with CO2 emissions as well as electronic waste. It's crucial to look beyond the surface of a business to fully analyze their sustainability. Moving on to ESG, we learned that this stands for environment, social, and governance. This is typically a way to measure a company's non-financial performance. The environmental portion looks at the company's direct impact on things like obedience with environmental regulations, resource and waste management, and their carbon pollution levels. The social aspect, on the other hand, focuses on the company's facilitation with workers, customers, and communities. The scope includes things like work conditions, employee morale, human rights and freedoms, as well as community satisfaction. Lastly is governance. This is the quality and clarity of internal management techniques, focusing on internal controls, shareholder privileges, audit history, as well as payment and benefit structures. To replicate the success of Thomson Reuters, prioritize transparency and integrity. Cultivating a culture of inclusivity, sustainable business practices, community support, charity assistance, and responsibility is also a technique that Thomson Reuters utilized. can also be effective to adopt frameworks like the Global Reporting Initiative, or GRI, define policies that ensure ethical operations, build trust, enhance stability, and benefit everyone, just like Thomson Reuters did so well.
Moco, it's unfortunate that the gaming company has gone bankrupt and you won't be able to collect on the $45,000 of merchandise inventory. But let's go over how to handle this situation completely and record it into your books. Hopefully your accountant set up an allowance for expected credit losses before this incident happened. This would have been an estimate in the last recording period of what could happen. It would look like this, where you debit credit loss or you credit allowance for expected credit loss. With the allowance established, when you realize that the inventory is going to be uncollectible on, then you can debit your allowance and credit your accounts receivable. With this allowance established, you're able to debit it for this uncollectible receivable now and credit your accounts receivable. This allows you to space out the financial impact of this loss over a longer period of time. Now for the merchandise that's sitting in storage, you need to write down its estimated value. This would look like this. Your inventory loss is debited and your inventory is credited. Now to physically move this inventory out of storage, the most sustainable option you're going to have is to donate it to an upcycling company or another charitable donation. On the books, it would look like this. You have a donation expense of $15,000, which is the estimated value of the inventory, which we estimated here, the $45,000 minus $30,000, and then inventory is being sent to the charitable donation. The reason this is the most sustainable and profitable approach to this loss on inventory is because now you can get tax credit once it's recorded in your book for donating to a charitable organization of that $15,000 of value.
By incorporating ESG principles, managing the merchandise in a sustainable fashion, and structuring accounting rules effectively, Elevate Media Collective is poised to thrive. These strategies align with your goals in going public and following the example of Thomson Reuters. Thanks for watching.